What's up, crypto fam? It's your favorite co-host, David. The title to this video might have made you scratch your head. You might think I'm off my rocker for making such a statement, but if you spend some time with me, my bet is a majority of you will agree with my reasoning. As always, nothing I say should be taken as financial advice. It's solely stats, facts, and my personal opinion. Now, before I tell you why a recession will be the greatest thing to happen to Bitcoin and share some tips to stay prepared, I need you to understand how recessions work, their impact, and why we are close to or already in one. What is a recession? Many economists agree that 2 consecutive quarters of negative GDP growth and rising unemployment are signals that the economy is in a recession, and we are currently halfway there, with Q1 GDP numbers coming in at a negative 1.4% and layoffs at large companies commencing. Major global events also play a big role in sending the economy into a possible recession, although on its own, it shouldn't be relied upon as a key indicator. The most consistent and potent indicator is the 2-year to 10-year U.S. Treasury bond yield curve inversion. When short-term interest rates exceed long-term interest rates, this is considered an inversion, and BCA research found that the gap between the 2 and 10-year yields has inverted before 7 of the past 8 recessions with no false signals. Since 1955, equities have peaked 6 times after the start of an inversion, and the economy has fallen into recession within 7 to 24 months thereafter. Let's take a look at a couple recent examples. Hurricane Katrina devastated the city of New Orleans in 2005, causing north of $100 billion in damage and interruption to the oil supply and exports of commodities such as cotton. The yield curve inverted in August of 2006, the Dow Jones topped out on October 9, 2007, and well, we all know what happened shortly after in 2008. The most recent example is August of 2019, when the yield curve inverted once again. This was followed by the pandemic. With the yield curve inverting before a major global event, this leads me to believe we were headed for a recession regardless of the pandemic, and that the pandemic just sped up the process. Both the Dow Jones and overall crypto market topped out on February 12, 2020, and the mini recession followed shortly after. Now, many high-profile individuals, including economists, CEOs, and investment advisors, have stated that the U.S. economy is already in a recession, disregarding a confirmation from the Q2 GDP numbers that are set to come out in July of this year. Now, personally, I agree with these individuals. There's plenty of evidence the U.S. economy is currently in the very early stages of a recession. These are the cold, hard numbers and facts. The 2020 pandemic destroyed the world's supply chains, with countries essentially shutting their economies off and manufacturing plants forced to shut down due to quarantine rules. The global supply chain was thrown off kilter. Factory closures, border restrictions, travel bans, port closures, and suspended transportations interrupted the entire supply network, leading to global shortages. Supply started to catch up in the latter part of 2021 and was looking to rebound until the invasion of Ukraine. This put a major damper on the supply of oil and natural gasoline, since Russian oil and gas was prohibited in some of the world's largest economies. More recently, the world's second largest exporter of wheat, India, announced a ban on wheat exports. Add this to the most recent pandemic lockdowns in China, and what you have is another 2020 level supply chain crunch. A quick look at the global supply chain pressure index shows the trend line starting to slope up yet again. On April 1st of this year, the 2-year and 10-year bond yields briefly inverted, causing some experts to sound the alarm on a recession. Now, although the 10-year is higher than the 2-year yield at the time of recording, investor and expert sentiment is that we will see another reversion soon. The brief yield inversion, coupled with the Dow Jones being down over 16% from its top on January 4th of this year, tells us investors have started de-risking well in advance of our imminent recession. And Bitcoin and crypto hasn't dodged the de-risking, as they are still considered risk-on assets. In fact, investors starting moving money out of Bitcoin starting in mid-November of 2021. Bitcoin is still a very, very young asset that has not been battle-tested on a global macro level. Investors, both retail and institutional, are unsure of how Bitcoin will react to such a recession. Throughout Bitcoin's entire lifetime, there has been some form of quantitative easing or money printing that's taken place. So it's a fair concern for the average non-degen investor to have about the possibility of a new risk-on asset plummeting to zero. Outside of global issues and yield inversions, the overall health of the economy has been declining for a few months now. Mortgage and credit card delinquencies are up quarter over quarter. Consumer credit card debt is nearing all-time highs, reaching $841 billion by Q1 of 2022. This is a reversal in trend when compared to the credit card debt numbers in 2020 and 2021, as people were paying off their debt with the extra money they received from the government. To make matters worse, you have large companies like Robinhood, Ford, and Netflix beginning massive layoffs. What worries experts and myself is, how will people start chipping away at their debt when inflation is over 8%, layoffs continue, and the government isn't able to print more money? When you combine rising rates and delinquencies and debt and pair it with high inflation and massive layoffs, you have a recipe for a recession worse than what we saw in 2008. The cherry on top, the government won't have the almighty money printer to bail us out. But it's not all doom and gloom, as long as you're prepared and in the right place at the right time. If you're watching this video, you're at the right place at the right time. We just need to make sure you stay prepared to capitalize on the greatest opportunity that is just around the corner. Bitcoin and crypto are synonymous, and that is not necessarily a good thing. This recent bull run saw a massive influx of scams, rug pulls, and just garbage cryptocurrencies enter the space. A recession is a surefire way to rid our space of all the garbage and allow the cream to rise to the top, with the ultimate asset being Bitcoin. And this is why I say that a recession is the greatest thing that can happen to Bitcoin. For Bitcoin to gain the massive adoption that we all so crave, there needs to be a cleansing of the cryptocurrency market, coupled with a massive shift in investment strategy. Think about the last time you made a major change in your life. Maybe it was kicking an addiction, or getting in shape, or switching careers. Chances are you had a look in the mirror or a I need to be better moment, where you really looked inward and decided right then and there you needed to make a change. It is my personal belief that when this next major recession hits, everyone from institutions and wealthy people to the middle and lower class will have no choice but to reevaluate their finances and investing strategies. Elon Musk has said that corporations have invested far too much money into junk companies and startups, and a recession will help them push the reset button. Retail investors over-leverage their investments into meme coins and useless crypto projects. Lower to middle income families are overextended in regards to their household debt and aren't properly exposed to quality investments. When the proverbial slate is wiped clean, everyone will be asking, what's an asset I can invest money into that I know won't get inflated to death, is a leader in a rapidly growing space, and has tons of monetary support behind it? I don't need to say it, do I? Here are some tips to prepare for the next massive wave of crypto adoption that could potentially change your life. And again, none of this is financial advice. Number 1, take a look into your personal finances and find areas you can cut back on. The last thing you need during an economic crash is subscriptions to 10 different streaming platforms. Second, maximize your working hours. If you aren't receiving pay raises that align with inflation, ask for a raise or simply add additional income streams. Third, evaluate your investments and make sure you aren't over-leveraged or have money in small cap projects or companies. Longevity is key. Think Amazon, Apple, Bitcoin, Ethereum. These companies and projects aren't going anywhere. Finally, get cash strong and stay patient. When Bitcoin bottoms out, you want cash on hand to capitalize on the massive discount you'll receive. Some say history repeats itself. I say history is merely an incomplete map to our future. Once we understand recessions, how they impact our everyday lives, and how to navigate through them, we too can build wealth for ourselves and our loved ones. Thank you guys so much for watching. I hope you enjoyed the video. Please like, share, and subscribe to the channel, and come check out our live stream weekdays at 10:30 a.m. Pacific time. Until next time, peace.